Welcome back to Power Lunch. Time for today's three-stock lunch. Here with our trades, Victoria Greene, founding partner, chief investment officer with G Squared Private Wealth. Victoria, good to see you. Up first is Oracle. Best day in more than 2 years. I'm having my best day in more than 2 years, I'll tell you that. Shares are soaring on better than expected quarterly earnings. Your trade here. Hope you're having your best day in 2 years, Victoria.
Absolutely.
Good.
I mean, I'm struggling a little with the time change still, not going to lie. That Monday morning hurt a little bit. But look, Oracle for me is absolutely a buy. It's just breaking out to new highs. It's finally leaping above. We've seen this time and time again with some of these tech AI stocks. It's finally the market is realizing the value they have and all of their databases and all of the cloud service. They're going to try to compete with AWS and Azure, and they're going to get there. They've got an $80 billion backlog. They can sell as much as they can build on some of their database and cloud systems. So for me, I see Oracle continuing to push up, just breaking out, and I think you can still get on board and get some upside with them.
Okay, so maybe there's still room to run for you if you're not an Oracle yet. According to Victoria, up next is 3M, hiring outsider Bill Brown, the former head at L3Harris Technologies, as its next CEO. That stock up today on the news. Victoria, what's your trade on 3M?
I am sell the rip. I'm sorry, this is still a turnaround story. There are so many headwinds to this company. And yes, I do applaud. It's a 120-year-old conglomerate. They're bringing in an outsider. He's probably going to do well, but he has a lot to get through. They have 2 lawsuits that they're trying to finalize settling. They're going to have to put aside more to protect their debt rating. They're spinning off their healthcare systems. This likely potentially 3M looks a little bit like GE, where they may have to continue to break apart and streamline, which they've talked about potentially having to focus on new lines and cull others. And the other problem is they have a China problem. 43% of their revenues are international, and 25% of that comes from Asia Pac, and it's just been soft over there. So not only do they have litigation headwinds, and they're working on spinning off the streamlining, but they still have some of the sector headwinds everybody else is facing. So for me, I take this up. I just don't see it hitting new highs.
All right, let's move on to Southwest Airlines. The company saying it needs to cut capacity, reevaluate its financial forecast for the year. That's never usually a good sign. Citing Boeing problems, by the way. So what's your trade on Southwest, Victoria?
I know it's down 10, 12, 14%, but it's a sell for me. It can always go down further. I think it's much more likely it hits that 22, 25 range, maybe pushes to new lows. They're having to cut because they're getting 0 MAX 7s. They're only getting 29 new plane deliveries. They're cutting routes. They're freezing hiring, and they're reevaluating spending. Those are fairly draconian measures that Southwest is taking. It's just not one thing. They're looking across the board. They're facing potentially rising fuel prices. They don't have the international routes that, say, a Delta and United were able to lean on. And it looks like potentially that their consumers getting a little bit pressured. And they also don't have quite the rewards and the extras. You know, we pay so much for baggage fees, and those keep rising. And Southwest, as customer friendly as they are, it also limits the revenues to plane tickets, basically, which cuts off more revenue growth streams that other airlines have been able to lean on. For me, I just think Southwest is a little too exposed here, and airlines are also exposed because you can't just build an airplane in a few months. That backlog is years.
Yeah, absolutely true. Victoria, thank you very much. We appreciate it there.